In this presentation, we will continue on with our comprehensive sole proprietor problem, now recording the transaction on January 16th. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Transaction being paid cash for year of insurance, like a year's worth of insurance. So we can go through our questions first and then go back here and see if we can think through this transaction with a little bit more detail. Our first question is typically, is cash affected? And for that, we don't need to go further than it saying we paid cash or paid stuff. It doesn't even need to say cash. You could just say paid, and we would say that must be cash we paid. So cash is a debit balance. We need to make it go down. So we're going to do the opposite thing to it. In this case, a credit. So we're going to right click and copy cash in L5. Scroll down. This is going to be on the bottom here. We're going to be in cell C22. Right click and paste. 1, 2, 3. Note that we're not building this top to bottom, left to right. We're building it in the way that makes the most sense. If cash is the easiest thing to think about, that's the thing we'll think about. So we're going to go cash, and it typically is the easiest thing to think about, and therefore is the thing we are thinking about. So there's cash. We're going to indent it, go into the Home tab. Alignment group, increase indenting, probably done for you already. We know that we're going to credit cash, so the cash is going to be a credit here because we paid it, and therefore it is going down. And we paid for $12,000. 12,000 seems to repeat itself here. So we're going to say negative 12,000 because it's a credit. Then we're going to debit something, so I'm going to put the debit on top in D21. I'm going to do that with a little formula. That formula is negative of that number. Picking up that number, flipping the sign. Now we just need to know what that debit should be. And remember what we did here is we paid for a year's worth of insurance. So if we go through our trial balance and look for something related to insurance, which it's nice to have a trial balance at any time, we could scroll through and we could say, how about prepaid insurance? That's a contender. And then we've got insurance expense. So it's a little confusing. What should that account be? Should it be prepaid insurance or insurance expense? Now, insurance is one of those things that's always going to be like, it's always going to be like this. It's going to be a prepaid account first, and then we'll expense it. And why? Because insurance is something we typically buy, we have to buy before we get anything from it. In other words, we have to pay for the insurance before we get the coverage, before we get the risk coverage that we will get in the future. So that means that when we buy it, we haven't gotten anything yet. And typically if we buy more than 1 month's worth, like a year's worth, then we want to make sure that we put it into prepaid insurance first, because if we were to expense it, you can think about the distortion that would happen. If I put it down here in expense, 12 months worth of insurance, even though we already paid for it, what would that do to net income? It would make it, in this case, go down to 0. It would make our net income be very low. And that's not fair to the month of January. If we were to compare January to February, January would look like it had a terrible month when it didn't. It just happened to be the month when we paid for an entire year's worth of insurance in January. And so that wouldn't give us a good accurate description of how we did January compared to February. So what we want to do then is record it as prepaid insurance up here, and then we'll allocate it to the expense as we consume it, as we use it. We'll do that with the adjusting process at the end of the time period. So here we're always going to put the insurance to prepaid insurance. And this is just part of the system. Remember, it's not, this is just part of the system we're going to make up. We're going to tell the accounting department, always put it into prepaid insurance when you pay it. And then at the end of the month, we'll figure it out and figure how much has been consumed, taking it out of prepaid insurance, the asset, and expensing it at that point in time. Okay, and that's in accordance with the matching principle. All right, so we're going to right click and copy prepaid insurance in L9. We're going to put that up top in C21 and right click and paste 1, 2, 3. There's our journal entry, which we have journalized in the general journal, this blue area, which we will now go through the process of posting to the general ledger on the right side. You can do that, and this is not the way we will do it, but just note that you could do this by making the screen really small so you can see everything at one time. If you see these little hashtags, it just means that you can increase the size of the cell and you'll be able to see the numbers. I'm going to do that with freezing panes. So we're going to go up top. We're going to make this large again. We're going to go to the left. We want to practice just maneuvering around this worksheet. I want to get rid of this A column, so I'm going to go to the right here so that B is flush with the side. We're going to go up top into cell K1. Then we will freeze the panes. We're going to go to the View tab. We're going to go to the Windows group. We're going to freeze the pane and freeze panes. And now there's no pane. It's been frozen. If we go to the right then, we can see columns B through E remain the same. Okay, so now that we have the pane frozen, we can continue working. So we're up top and we see that the prepaid insurance is here on our journal entry. On the trial balance, it's going to be that's like our 5th account. And it's going to be the same on the GL. So in other words, we've got cash, accounts receivable, supplies, equipment, prepaid insurance, then is down here. So it's don't go into prepaid rent. I don't even know why that account's there. We don't have any rent. But anyway, we're going to be down here, prepaid insurance in cell S28. We're going to record this prepaid insurance in cell S28 with a formula by saying equals. Pointing to that prepaid insurance in D21, bring the zero balance up by 12,000 to 12,000. This 12,000 then also being found on the trial balance. We can see that by clicking just to the left of the frozen panes and then going right on the keyboard. And we will see the 12,000 here in the assets section of the trial balance. Scrolling down, we're out of balance by the 12,000 until we record the other side, that other side being cash. So this is the cash we want to record. Here it is. On the trial balance, it's going to be the first account, our favorite account, on the GL as well. So we're going to be here, we're down in this cell. So cash, debit side, next available area in the blue area. Actually, we're on the credit side, because it's a credit. So we're on the credit side here in cell P12. So within P12, we're going to say equals. Point to that 12,000. It's going to bring the 43,000 down by 12,000 to 31,000. That 31,000 then can be found on the trial balance here. It should pull right over, and that'll put us back in balance. So we're back in balance here. Notice there's no effect on net income. Net income is still revenue over expenses. Revenue's beating expenses by the 12,000. We don't have an expense related to prepaid insurance, even though we paid for it. It didn't bring down net income. Why? Because really we just gave up one asset for another. Meaning this is something cash and we hope to consume in the future in order to help generate revenue. That's why we have it. If we just wanted to hold on to cash, we would give it to our personal account. And this is something that we're holding on to, an insurance policy, to help us generate revenue in the future as well. Once this policy is consumed and used for risk protection and the time period has passed, that's when we're going to record it down here when it's consumed as an expense in accordance with the matching principle. And we will do that in the adjusting entry process as part of our system. For more accounting information and accounting courses, visit our website at accountinginstruction.info.